Hi, my name's Jennifer, and I want to help you live your best life. Life isn't permanent. You'd think your day-to-day life will always be the same, but it isn't, is it? The circumstances you are in, the people around you 5 or 10 years ago aren't the same as today, and your today will not be the same as your tomorrow. As they say, the only constant in life is change. And yet, people resist change. Why? Why do some even hate it? I think it's because of fear. Fear of the unknown. Yes, change can be disorienting and scary, but it can also be a valuable opportunity to reevaluate your life. Embrace that change, and always remember, you can't control what happens to you, but you can control the way you react. And another thing you can control is working towards your financial freedom. So, let's get into today's topic and find out, what kind of investor are you? Investor type number 1, the pre-investor. This person is someone who simply isn't investing. We'll consider this level 0. Minimal financial awareness, little savings, and little thoughts of investing. Mostly, everyone starts here. I definitely did. Maybe a lot of you still are here. And if you are, and you're watching these videos to move out of this level, good on you. And it makes me very happy if I can help. So, let's talk a bit more about this level and what the mindset usually is here. The pre-investor's financial world revolves around consumption. They make money from a job, live paycheck to paycheck, and believe that their next goal should be a higher paycheck to get into a more luxurious lifestyle. That's exactly where I was for many, many years. I just went about the motions, only looking as far ahead as what my next job would be, if I stopped enjoying the one I currently had. And this went on until I realized that the most valuable thing I own isn't my house, or my car, or my phone. It's actually my time. This limited resource that I am taking for granted and that I can never buy more of. So something had to change. Or I was going to spend the rest of my life jumping from one job to another, spending my time and money on things that aren't fulfilling or that important. So I took action. I decided to invest in my dreams and in my future, to reach financial freedom to live my life the way I wanted to. And that was when I moved to the next level, which is investor type number 2, the passive investor. This investing strategy is a very good starting point for anyone new to the world of investing. It's also ideal for people with busy lives who want to focus on family, a job, maybe building their business, or other interests that they might have. The best thing about passive investing is the simplicity. You don't need much knowledge, and it's accessible to the general public. So what is passive investing, and how is it done? This style of investing is based on maximizing returns while minimizing buying and selling. So basically, you buy and hold over the long term. And by doing this, first, your fees are lower because there's no frequent trading. Let me explain this more. Usually, whenever you buy or sell a security, there is an associated fee that goes with it. So, when you minimize buying and selling, you're minimizing the fees you pay. Second, with passive investing, you will be more tax efficient. Why is that? And what does that even mean? Basically, whenever you buy something and then sell it at a price higher than what you bought it at, you have to pay a government fee on the profit you made. This is called a capital gains tax. Capital gains treatment applies to capital assets, such as stocks, bonds, jewelry, coin collections, and real estate property. Now, this tax is only due once you sell your investment. So, if you buy and hold for 10 years, you don't pay any capital gains tax on what you're holding for those 10 years. You only pay something when you sell, assuming they've appreciated in price. Another thing to note is that these tax rates change based on how long you've held your investment for. If you sell something you've held for less than a year, it's considered short-term. So you get taxed at the short-term capital gains tax rate. If you hold your investment for longer than a year, it becomes taxed on the long-term capital gains rate. And that long-term tax rate is less than the short-term tax rate. Simply put, the longer you hold, the less taxes you pay. Now, the rate and time frame vary from country to country, so make sure you know what the exact numbers are for you based on where you are. Now, for this passive style of investing, you need to save and contribute regularly over several years. Also, it involves you basically following the market, especially if you invest in index funds. I'll be talking more about those in another video. So you sort of ride the market roller coaster up and down, but hopefully, as the market tends to trend upward over the long term, you end up at a higher point than where you started. Moving on to the third type of investor, investor type number 3, the active investor. Active investing can be considered the next level up, but it involves more work and is not for everyone. The reason some people attempt this is because they believe they can beat the market rate of return. Remember that 7% we talked about in the previous video? Yeah, some people believe they can do better than that. If they are actually able to change their growth rate, even if it's a small change, it can lead to huge differences in wealth. Like I also said in my previous video, the most important factor in creating or increasing wealth is not how much you earn, but how much your money earns and the length of time it compounds. If you're going to consider active investing, you first have to ask yourself, do you have the time and desire to learn the skills required? Also, there have been many heated debates among investors about which strategy is better, because they usually strongly favor one strategy over the other. So, which is the best strategy, you ask? To me, the best answer is whatever works for you. I think both styles are beneficial. Each type has its pros and cons. The best thing you can do to pick is to educate yourself. Learn what works best for you and go from there. Whether you're going to give your money to a financial manager to manage it for you, or you decide to do it yourself, you should know the basics in either case. Knowledge really is power, and you will serve yourself well having a good understanding as a foundation. Remember, you're doing this to react to change the way you want to, and to not fear it when it comes. And change always comes. Your life is your story. Write it the way you want, and move in the direction you want to go. If you enjoyed this video, please hit the like button, and if you'd like to see more, subscribe to the channel. Thank you for watching, and have a great day.